Hello traders, this is D7 with freetradingvideos.com with your weekend edition. The market's starting to get choppy. Alrighty, this is a 3-day weekend. Martin Luther King Day on Monday here in the United States, so we will not have any trading taking place. Here is the S&P Daily, and on Friday, a ginormous drop. Matter of fact, it was a drop of 1% to the downside. And here we are, big down day. So let's blow this up, see what's taking place. Look at this, where we stopped. Boom! On that trend line. We went all the way down and tagged that trend line. Is that by accident? Not a chance. It is amazing how well trend lines work and how wonderful they are to helping us make money in the markets. Look at this MACD. MACD giving us another solid tick to the negative side. Here on the histogram showing a drop. So here with this bearish divergence in place, a drop that happened on Friday with a negative tick on the histogram does not bode well. And gang, watch Thursday's video. I explained in no uncertain terms that 1150 was a major resistance area. And matter of fact, let's just get into talking about that right now. Let's just look at the weekly while we're here. The weekly cannot get off this lower trend line, gang. That is a bearish move. MACD, we have a positive tick, but we're working on a negative tick or a crossover taking place. You can see it right there. If we break below that trend line, be wary of that. But more important than that is the big time frame here. This is the monthly. Let's pull this back. This goes back to the 90s. We get this big double top or M formation, M for murder, and we drop and we pop, right? So look at this. We hit here a number of times. We hit here a number of times, and then here, so we have what's called a broadening formation, which are usually more bearish than bullish. But I want to pay attention to this red line coming across. This red line back in the late 90s was major resistance. When we broke that resistance, blow this up so we can really see this. We hit resistance in the late 90s. Come down, we blasted through in the later 90s, which sends us straight up. Remember, every bar is 1 month. In the year 2000, we hit our head and we come down. Now look at this. We're at this red line again in 2001. We bounce up and we immediately come right back down. Look at this. We broke it right there. We dropped in 2001. We come up. Now that line's acting as resistance. Sure enough, perfect resistance. Perfect resistance again. We go back down, down. We bounce off of this line. We bounce again. Double bottom. W for winner. We head up. We're in 2003. Come up. Resistance right there in 2004. Resistance again. 2005 area. We bust through right here at the end of 2004. High base acting as support. Support. We come up, 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 up. We're in a bull market. We smack our head in 2007. Smack our head again 2007. 2008 we drop. Come on down. And right here, look at this. We're at major support. Boom. We crack it. We cracked it with a vengeance. Look at this. Boom. And then closing below the 200-month moving average, we come crashing down, 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 down. We bounce. We go up, up, up. In 2009, look at this. We go up, up, up. Look where we're at right now. Boom. Right there at that resistance point. That's where we're at. It's 1150 on the S&P monthly. Let's go to the Nas. Told you in Thursday's video, watch the Nasdaq and Russells. Those should be the first ones to break down in a bear market. Here, rising wedge. Those are bearish. Let's see what the MACD is doing. Negative. Tick on the histogram. And here we're actually making a higher swing high, so there's no divergence here. We take this and bring it over a little bit, kind of flat. See this, flat and slightly going down. So that's a little bit of a bearish divergence, not as much as the S&P. Now we're still above the zero line, but we do have negative ticks, and we're showing weakness. What we did not do, look at this, we smacked our head here. We come up, smack our head here. We smacked our head there on their line, but we missed it this time. See that? We missed it. Very important. That shows a lot of weakness that we couldn't get back up there. Now, we have what's called a tweezer reversal pattern. And we come crashing back down with the 20-day moving average acting as support. So I am looking for this trend line to get pierced. If that happens, I'm short the market. Now, let's bring in the weekly. We're just heading up. This thing has been on a tear. I mean, look at this. Just straight up. Here, let's get a lower trend line next. The lower one's what's really important at this moment. Bring this up, 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 up. We're just right there at that support. Just right there. If it breaks below that, we have some moving averages that act as support, but it could get hairy and fast on the weekly. We just now got our first negative tick on the histogram on our weekly. So we have a bearish divergence on the weekly. Doesn't bode well in the big picture, but let's look at the big picture, the monthly, which trumps them all. See what's going on. Big symmetrical triangle, resistance, 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 and resistance, support, and support. But this line was hit back here in 2000. We hit it again 2007 and 2010. Let me show you where we're at on this monthly chart. Look at this. Right there. Little doji type formation. Couple weeks left until this month's over, but wow, we're at major resistance, gang. We're at major resistance on the Nasdaq, major resistance on the S&P. So look at the Russells. Alright, here we have a rising wedge. You can see where we hit. Let's come in a little bit. Resistance, 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 and we're at resistance. Look at this red line coming across. It's right here. January 2008, and then the lows here March 2008, then these lows right here July 2008. When it broke that area, it really broke hard, and we come across, and that's precisely where we're at right now, at that area. This is a big time 650, big time area of resistance. MACD, drop a line right here, bearish divergence, going up here but going down there, bad sign, negative tick on the histogram, another bad sign. And let's bring in a weekly. Here's the weekly. The weekly has the 200-week moving average just above it right there, but it's above all the other major moving averages. And I want to bring the monthly in, which trumps them all. Here's the monthly. Higher swing highs and also a higher swing low, but this is still a broadening formation. Even though both lines are going up, it tends to be a little more bullish than the other, but still, because it's broadening, will slant to the bear side. We come dropping down, we come up and we smack our head on this red one. Why do we smack our head on the red one? Let's blow this up so we can see it. Right here in 2005, we came up, smacked our head on it, act as resistance. We came down. 2005, we blew through. The late 2005, it acts as resistance. Then right here in January 08, acts as support. March 08, support. And July 08, support. So this got hit a plethora of times. Then when we broke it finally, we really crashed. Now we're back up, knocking at the door. And again, that's that 650 area on the Russells. So across the board, major resistance. So safe trading to each and every one of you.